All right, everyone, welcome back to Eco Wealth Lab. Are you guys ready to,
Ready?
ready to jump back in
Let's do it.
to the crypto markets? I know it's a little bit crazy out there right now, but that's why we're here
Indeed.
to, make sense of all this chaos and hopefully give you guys some good insights into what's going on and maybe where things are headed.
Absolutely, and hopefully help you make some money along the way, right?
There you go. Exactly.
Yeah.
That's the point of all this, right?
Gotta keep our eyes on the prize.
Yeah, for sure. So before we get too deep into it, though, guys, hit that subscribe button. Help us out, spread the word about the show, and let's get started. So today we're going to be taking a deep dive into the crypto markets. I know it's been pretty volatile lately. Lots of ups and downs, talk about trade wars and everything else going on in the world. So it's really hard to tell, are we still in a bull market? Or are we heading towards a bear market?
Right, it's the question on everyone's mind.
Exactly.
And I think that there's some really interesting evidence on both sides of that. Some people look at it and say, hey, look, we've had these dips before. This is just, kind of a pause in a larger bull run.
Yeah.
Some people are really starting to think that there's some macroeconomic headwinds that could trigger a much deeper correction, with this trade war and all that stuff that's going on. It's definitely adding to the bearish sentiment.
Yeah, it feels like every other headline I see is like, crypto's doomed. It's all over. Get out now. But
Right.
that's not what we're about here, right?
Yeah.
We want to actually, like you said, look at the evidence, see what's really going on, try to cut through the noise and figure out, okay, is this fear justified or is there more to the story here?
Exactly. I think that's what we want to do. And we've got a lot of great information to look at today. We've got technical indicators, we've got macroeconomic factors, all kinds of things that might give us some clues.
Yeah, so let's start with a technical indicator. Actually, let's talk about Bitcoin's 1-year moving average.
Yeah.
Because that's something that's been pretty significant historically, right?
Yeah, so for anyone who's not familiar with that term, it's basically just the average price of Bitcoin over the last 365 days.
Okay.
So it's kind of a long-term trend line.
Gotcha.
And basically what history has shown us is that during bull markets, Bitcoin tends to find support at or above that level.
Okay.
And as long as the price is holding above it, it usually suggests that the bull market's still intact.
And that's pretty interesting because, even with all the craziness with the news about Black Monday and the tariffs and everything,
Right.
Bitcoin didn't actually drop as much as like the S&P 500 did,
Yeah, that was really interesting to see.
Yeah.
So when we had that big, tariff news, the S&P dropped quite a bit, like 7%, I think, and Bitcoin, it reacted, for sure, dropped about 11%.
Yeah.
But what's interesting is that it held pretty strong around that 1-year moving average level.
Right.
Which for an asset that is known to be really sensitive to bad news, I think that's a really promising sign.
Yeah, it definitely suggests some underlying strength there. And this is where it gets really interesting for me because it's not just the moving average by itself.
Yeah.
Right? There's also this ascending channel pattern that we're seeing with Bitcoin's price. And it kind of reminds me of what happened back in like 2015, 2017 before we saw that big price surge.
Exactly. So what we're seeing right now is Bitcoin kind of trading within this upward sloping channel. It bounces off the lower trend line, which acts as a support level. And it's very similar to what we saw back in 2015, 2017. And if you remember back then, that preceded a pretty substantial move upwards.
Yeah.
So, the fact that this tariff news came out when the price of Bitcoin was near the bottom of that channel and
Right.
it held there, it kind of strengthens the idea that, there's still some real strength in this bullish structure. And you can almost think of it as like a river flowing uphill with defined banks.
Yes.
As long as the price stays within those boundaries and bounces off that lower bank, that support line.
Right.
The momentum is generally considered intact. But if it breaks below that line, that could be a signal that something's changing.
Gotcha. So from a technical standpoint, at least looking at these indicators, it seems like there's some reason to be bullish, right? That the upward trend might still be in play, but obviously it's not just about the charts, right? We need to consider the bigger picture in the global economy. And that brings us to global M2 money supply.
Yeah, absolutely. So global M2 is basically the total amount of liquid money that's circulating around the world.
Okay.
And the interesting thing here is that we've seen historically there's a correlation between changes in global M2
Yeah.
and Bitcoin's price.
Interesting.
Usually there's a lag of about 108 days.
Okay.
So when global M2 increases, we usually see Bitcoin follow suit a few months later.
And we have seen a pretty big jump in global M2 recently, right? Like one of the biggest single-day jumps in a while, I think.
Yeah, it's been pretty significant. And what's interesting is the timing. There was a thought that global M2 might be bottoming out soon, like maybe in the next couple of weeks from when this video that we're looking at was released.
Mm.
And so this big jump could be a signal that that's exactly what's happening, that we've bottomed out and we're starting to see a new uptrend.
Okay, so you're saying it's possible that we're already seeing the beginning of that new uptrend?
Potentially, yeah.
Interesting. And our source brought up this really interesting theory about how this ties into the trade war situation, specifically the pause in the tariffs.
Right.
Can you explain that a little bit?
Yeah, so the idea is that while the pause itself, isn't going to just magically inject money into the system right away,
Sure.
it does give us this window of opportunity.
Okay.
Because if during that 90-day period, some of these big players in the global economy can negotiate and reach some trade agreements,
Right.
that would help to reduce uncertainty in the markets.
Which markets generally like.
Exactly. And so that could contribute to an increase in global M2.
Okay.
Because, we'd see more economic activity, hopefully.
So basically the hope is that if things calm down on the trade war front, that could create this positive feedback loop where, we have more global trade, more economic activity.
Right, more money flowing around.
Right, exactly. More money flowing around. And that could be good for Bitcoin.
Exactly. That's the theory anyway.
Okay.
And the source even speculated that, this big jump in global M2 we saw could potentially coincide with a major trade agreement happening towards the end of that 90-day period.
Oh, wow. Okay. So there's some potential for some good news on that front.
Possibly.
Yeah.
But it's important to note that, just because global M2 is going up doesn't mean that Bitcoin's price is going to go up.
Right.
Proportionally.
Right.
It's not always a one-to-one correlation.
Yeah, there are other factors at play.
Absolutely.
Of course.
Yeah.
So let's talk about some of those other factors then. One of the big ones that we always have to keep an eye on is inflation and interest rates. We got some interesting data recently, right? Inflation came in a little bit lower than expected.
It did, yeah. So the core CPI number came in at 2.88%.
Okay.
Which was below the 3% forecast that economists had been predicting.
Right.
And this is important because the Federal Reserve, they look at that number really closely when they're making decisions about interest rates. And just to clarify for anyone who's not familiar with that term, core CPI basically strips out the more volatile prices of food and energy. So it gives them a more stable read on what's going on with underlying inflation trends.
Gotcha. So it's a more accurate picture of what's really happening with inflation.
Exactly. And the fact that it came in below the forecast suggests that maybe, inflation might be easing up a little bit.
Okay, that's interesting. And we also got a glimpse of this true inflation data, which is supposed to be pretty good at predicting where CPI is going to go.
Right.
So what did that tell us?
Yeah, so this true inflation data is suggesting that we could see further declines in CPI over the coming months.
Okay.
Potentially down to like 2.5% for March and maybe even closer to 2% when we get the April data.
Wow, so inflation could really be coming down.
It could be.
Okay, so if that happens, if inflation really does start to cool off, how does that affect interest rates and what does that mean for crypto?
Well, when inflation is low or falling, the Fed has more flexibility to consider cutting interest rates.
Okay.
And the expectation right now, based on this source, is that we could see somewhere between 75 and 100 basis points in rate cuts between now and the end of 2025.
Wow. Okay, and just to remind everyone, a basis point is what 1/100th of a percentage point.
Exactly. So that's like, 0.75% to 1% in potential rate reductions.
Gotcha. So we could be looking at some significant rate cuts in the future.
We could be.
And so the idea is that if inflation is under control and interest rates are coming down, that creates a more positive environment for asset prices in general.
It tends to
including crypto.
Right, because when rates are lower, holding cash becomes less appealing.
Right.
So people are more likely to put their money into assets that have the potential for higher growth.
Like crypto, exactly. So that's a potentially very bullish scenario for crypto.
It is, yeah, but there's always a but, isn't it?
There's always a but.
There are some things going on in the bond market that we need to talk about.
Okay, this is the part where things get a little bit scary, right?
Yeah, maybe a little bit.
Okay.
So our source pointed out that it looks like China might be selling off U.S. Treasury bonds.
Okay, and that's not good.
Well, it depends on how you look at it.
Right.
But it's definitely something to pay attention to.
Okay.
So the bond market, it can tell us a lot about investor confidence in the overall economy.
Okay.
And there's this inverse relationship between bond buying and selling and bond yields,
Okay.
which is basically the interest rate on a bond.
Gotcha.
So when investors are buying bonds, the demand goes up and yields go down.
Okay.
And when they're selling bonds, yields usually go up to try to attract buyers.
Okay, so if yields are going up, that means people are selling bonds.
Exactly. And U.S. Treasury yields have been trending upwards, which suggests that there's some selling pressure happening.
Okay, and the theory here is that China might be one of the entities selling off these bonds, maybe in retaliation for the tariffs that the U.S. has imposed.
That's the theory. Yeah. And the thought is that they might be doing this so that they can take that money and use it to buy domestic stocks in their own market,
Okay.
which would help to stimulate their own economy.
Makes sense.
And it would also, kind of as a side effect, increase U.S. debt.
Right, because they're selling off U.S. debt, essentially.
Exactly.
Okay. And our source mentioned that it's not just China, right? There might be other countries doing this too.
Yeah, any country that's, feeling the negative effects of the tariffs
Right.
might be tempted to do the same thing.
Okay. So that's definitely something to keep an eye on, and it's especially concerning because we're actually seeing both S&P prices and bond prices falling at the same time.
Right, which is unusual.
Yeah, isn't usually like when one goes down, the other goes up?
You would think so, yeah.
Yeah.
Usually government bonds are seen as a safe haven
Right.
when the stock market is tanking.
Yeah.
So when both are going down at the same time, it suggests that there's a real sense of unease in the financial system.
Okay, so that's definitely a red flag.
Yeah.
But I know our source also highlighted a chart that compares Bitcoin's market cap to the VIX, which is the volatility index.
Right.
And that's actually a chart that was originally shared by Oz Ask Crypto Wealth.
Yeah, I love that guy.
He's great.
He's brilliant.
So what does that chart tell us?
Okay, so this chart, it basically shows us a pattern
Okay.
where big spikes in Bitcoin's price have tended to happen after its market cap touches a specific trend line on the chart.
Okay.
And these touches often line up with major news events that cause a lot of fear and uncertainty in the market.
Like what kind of events are we talking about here?
Well, things like the China market turmoil in 2015,
Okay.
the pandemic,
Oh, wow.
shifts in the Japan carry trade,
Okay.
and now more recently, this trade war situation.
So big macro events that shake things up. Gotcha.
And so the fact that we're seeing another one of these touches right now
Yeah.
could be a sign that something good is about to happen for Bitcoin.
Interesting.
Yeah, because this pattern suggests that when the market is super fearful,
Right.
Bitcoin tends to get undervalued,
Okay.
and that creates good buying opportunities.
So it's like that whole buy when there's blood in the streets kind of thing?
Exactly. But of course, that's not financial advice,
Of course not.
just an observation.
Right. Always do your own research.
Absolutely.
But it is interesting to see that pattern playing out again.
It is, yeah. And it kind of goes back to what we were talking about earlier with, the one-year moving average and how Bitcoin held up pretty well during that tariff news.
Right. It seems like those moments of maximum fear can actually be good entry points if you're brave enough.
Potentially, yeah.
Okay, so let's shift gears a little bit and talk about altcoins because a lot of people are wondering, is alt season coming? Is this the time to load up on altcoins?
Right.
And our source mentioned a global business cycle indicator that can help us figure that out.
Yeah, so this indicator takes into account the business cycles of like the US, Canada, China, the EU, Japan, and the UK.
Okay, so it's like a global snapshot of how businesses are doing.
Exactly.
Yeah.
And the idea is that alt season is more likely to happen when this indicator breaks above a midpoint of 50.
Okay.
Which basically means that we're in a period of increased economic activity and, importantly, more consumer discretionary spending.
Which means people have more money to spend on fun stuff.
Right, exactly. And some of that money might end up in altcoins.
Okay, so that makes sense. And historically, when this indicator has crossed above 50, we've seen some big moves in altcoin prices.
Yeah, it seems to be a pretty reliable signal.
Okay, so what's the indicator saying now?
Well, right now it's below 50, but our source pointed out that there seems to be a roughly 4-year cycle in these global business cycle peaks.
Wow.
And the next peak could be around November of this year.
Interesting. So we might be getting close.
Yeah, and the thing to watch for is when the indicator reverses its trend and breaks back above 50.
Okay, so that's the signal to start buying altcoins.
That could be a good time to consider it, yeah.
Okay, and we also looked at another indicator specifically designed for identifying alt season, right? The Bitcoin versus Market Oscillator, or BVMO.
Right, so this indicator is all about measuring the relative strength of the total cryptocurrency market when you exclude Bitcoin,
Okay,
compared to the strength of Bitcoin itself.
gotcha.
So basically, how well are altcoins doing, compared to Bitcoin.
Right.
And historically, there's been this period of about 910 days after Bitcoin's dominance in the market breaks above a certain midpoint,
Right.
where Bitcoin tends to outperform the rest of the market.
Okay, so Bitcoin's in the lead for a while.
Yeah, for almost 3 years.
Oh.
And then alt season usually starts when this BVMO indicator starts to drop.
Okay, so that means altcoins are starting to catch up.
Exactly. They're starting to gain momentum relative to Bitcoin. And it's kind of like a ratio. You know, when the ratio of altcoin market strength to Bitcoin strength starts to increase, that suggests that altcoins are taking over.
Interesting. And the current pattern looks a lot like what we saw back in 2017.
It does, yeah. It looks like Bitcoin's dominance could peak around May or June of this year.
Okay.
And then altcoins could take the lead.
So alt season could be just around the corner.
Potentially, yeah. But it's important to note that this doesn't necessarily mean that the overall crypto cycle is topping out.
Right, it's just a shift in dominance.
Exactly.
Okay,
Yeah.
so altcoins might outperform Bitcoin for a while, but that doesn't mean the whole market's about to crash.
Right.
Gotcha. Okay, so one last thing I want to touch on before we wrap up is stablecoin dominance, because I know that can also give us some clues about where Bitcoin might be headed.
Yeah, so stablecoin dominance tends to have this inverse relationship with Bitcoin's price.
Okay, what does that mean?
So basically, when Bitcoin's price is going up, stablecoin dominance usually goes down
Okay,
because people are moving their stablecoins into other crypto assets.
to try to make more money.
Exactly. And then when Bitcoin's price is correcting or going down, stablecoin dominance goes up.
Because people are moving their money into something safer.
Exactly.
Okay, so it's like a fear gauge almost.
Kinda, yeah.
Interesting. And we've seen this pattern play out in past cycles, right, where stablecoin dominance drops before Bitcoin makes a big move upwards.
Yeah, if we look back at 2019, for example, we saw noticeable drops in stablecoin dominance before both of Bitcoin's major price peaks that year.
Okay.
And we've also seen stablecoins gain strength during corrections,
Right.
like the one we had after the first price high in this cycle,
Right.
and more recently with all this trade war stuff.
So it's like people are getting scared and moving their money into stablecoins.
Yeah, basically.
Okay, and what's really interesting is that the timing of this cycle looks very similar to the previous one.
It does, yeah.
Like the initial uptrend, the breakout, and the time leading up to that potential second high.
Right.
It's almost like we're following the same playbook.
It's very similar.
And our source even compared it to what happened during the pandemic.
Yeah. They said that the pandemic caused a temporary rise in stablecoin dominance,
Okay.
but then it dropped off right before Bitcoin hit its all-time high.
So it's like the pandemic was this big scare event that
Mhm.
caused people to flock to stablecoins.
Exactly.
But then once the fear subsided, Bitcoin took off.
Right. And what's happening now is that we're seeing stablecoin dominance retrace,
Okay.
which suggests that money could be flowing back into riskier assets.
And that could mean that Bitcoin is about to make another move upwards.
Potentially. Yeah. And if we look at a regression trend line of stablecoin dominance against Bitcoin's price,
Okay.
we can actually see that historically drops in stablecoin dominance below this trend line
Yeah.
have preceded some pretty significant Bitcoin rallies.
Wow. Okay, so stablecoin dominance is definitely something to keep an eye on.
Absolutely.
All right, so to sum all this up, we've looked at a lot of different indicators today, both technical and macro, and it seems like there's a case to be made for both sides of the argument, right?
There is. Yeah.
We've got Bitcoin holding strong at its long-term moving average, and within that ascending channel,
Right.
we've got the potential for global M2 to keep increasing,
Yeah.
maybe helped along by some positive developments on the trade war front.
Right.
Inflation seems to be cooling off, and we might even see some interest rate cuts in the future.
Yeah.
But then we've also got some concerning signs of the bond market, with China potentially selling off U.S. treasuries and other countries maybe doing the same thing.
Right.
So it's definitely a mixed bag.
It is. Yeah.
But I think the main takeaway here is that there are a lot of potentially positive factors lining up for crypto.
I agree.
And while there are some risks to be aware of course,
Of course.
the overall picture looks pretty optimistic,
Yeah, I think so.
especially if you have a long-term perspective. You know, our source even mentioned the possibility of more short-term volatility.
Yeah. They said we could see another pandemic level event even.
Right. But even with that possibility,
Right.
it's hard to ignore all the positive signs that we're seeing.
Yeah, I think so.
And that makes this a really exciting time to be in the crypto space.
It does. Yeah. It's a never dull moment.
Never a dull moment, that's for sure. So what about you guys? What do you think? Are you feeling bullish, bearish? somewhere in between? Let us know in the comments below. We'd love to hear your thoughts. And also, what are you keeping an eye on? What specific developments in global trade or monetary policy are you watching most closely right now? Let us know. And if you found this deep dive helpful, please hit that like button, subscribe to the channel for more insights like this. And as always, thanks for watching.
See ya.
See you guys.